Welcome, everybody, to Town Hall number 86. It's Wednesday, May 25th, 2022. It's the birthday of my wonderful mother. Yep. And just a good day in general. I think there's a couple good things happening. One, the new Stranger Things comes out, I think tomorrow. Or is it today? I think it's tomorrow. Stranger Things Part 4. So I've been waiting for that. I need to find out what happens to Hopper. For those of you that don't know what that is, go find out. Yeah, it's just an interesting time in general. Lots of things going on. So let's move to the next slide here. I am John Best, CEO and co-founder of Best of H Group. Yeah, that's us. That's very young pictures of both of us. And that is the one and only Mike Lawson.
We need to put Glenn up there too.
Yeah, we need to. We will. He's not here today, but we will. He said, don't put my picture up. I don't know what that means. He doesn't want to be associated with us, I think.
You should probably put it up anyway.
But anyways, let's move on to the next slide here, and then we'll kind of get going. Today's going to be kind of an open discussion, so I'm kind of excited for it. I want to, pick your brain about some things and pick everybody's brain about some things. Okay. So let's start off here. CUNA Councils. CUNA is the only national association that advocates for the entire credit union movement. As your strongest advocate, we promote, support, protect, unify, and advance the credit union movement. Visit us online at CUNA.org. And yes, there is pretty much, if you need information, that's the place to go. I know I'm doing a couple more things for them. I believe the tech coming up in, I want to say it's October.
Yeah. When is the tech one? October? Okay.
Yeah. Then there's the CEO roundtable, I believe, that I'm also doing as well. So
yeah, they have a lending one, I think, in November. Yeah.
Yes. They kicked me out of the lending one.
The lending one's going to be here in San Diego. So you guys got to
go. I can't go back to San Diego after the incident. That's why I haven't been in a while, But so check CUNA out. If you're not going to their conferences, the best part of those conferences is meeting your peers. But there's great content, gives you a great way to meet your peers. It's just a really good environment. So check out CUNA.org. And you would take the next one?
Yeah. Speaking of conferences, Correlation, one of our industry's finer core processors, had their big conference last week here in San Diego. And oh my gosh, they had 1,200 attendees. So they're back to their pre-COVID numbers. And it was a great conference. I had Darren Williams spoke there. Sunday was there. Sunday Seafried was there. Who else was there? Oh, John Brett Sakis was there. So they had some great, really, I was like, whoa, Darren Williams, you're here. What?
Yeah. I haven't seen Darren. Man, Darren, just even getting Darren out to speak, that must've been amazing. I haven't heard from
Gary
him
Perez from USC was there speaking. So they had some, Andy Janning from NoNet was there. So yeah, they had some fantastic speakers, fantastic topics. So just a great time.
Well, I gotta imagine you did 60,000 interviews, which we can all go watch.
Somewhere in there, something like that. We were very busy. So yeah, and I was very honored to be I've never interviewed Darren Williams before. And so I finally got my chance to, and he was fantastic. And we have that posted today on our site. So if you want to go check that out, he was very candid. Let's put it that way. So yeah.
Yeah. Very fortunate to have worked with him. I count myself.
He's a good dude.
Blessed to have had that opportunity. Speaking of opportunities, you know what? Everybody that runs a credit union or is in a credit union has an opportunity to do. They have an opportunity to use Member Pass. You know why? Because Member Pass, and by the way, this is now really becoming the thing. The difference is when you look at these products where it's using something to validate you on the phone, or it may or may not be a blockchain based platform that's doing a really high level of security, but Member Pass absolutely is, which can lead to a lot of other stuff. As a matter of fact, we had Gordy on not too long ago, Gordon Howe from Unify, and he told us some pretty amazing things about his crypto program. And him and I were talking about something I've been working on with Cynthia, which is, and also John Ainsworth and obviously Bonify, which is, could there be a stable coin for the credit union movement? And it was very interesting. But if you're going to have that kind of thing, wouldn't it be nice if it had very, very high security for anyone that accesses it? So it's an interesting concept.
I like that.
But it's a great way to just save a lot of time and trouble and support the credit union movement. It's by credit unions, for credit unions, owned by credit unions. John was a former very high leader at MasterCard. It has incredible leadership. If you haven't checked out Member Pass and you want just an easy way for your member to be able to be at a, to call in and not go through 50 questions and just pick up their phone and go, yeah, it's me. Just like your VPNs, this is the product for it. Speaking of that, if you want to know what's going on, and if you're not a loser, you should be at CU Broadcast, because CU Broadcast is where it's at. Everybody knows who's anybody that, you know, if you want to learn what's going on, if you can't make it to these conferences, the next best thing you could do is go and listen to Mike.
Yeah.
He's an incredible interviewer.
Thank
He
you.
understands our industry, and I'm going to go watch the one with Darren. I can't wait to see that when that comes out.
That's a must watch for sure.
For sure.
And you've been on there many, many times as well, sir. So I always appreciate your presence on our show. So you always contribute in a very unique and informative way. So
I try.
You do very, very well. You were the first one to actually drive around in your car and do an interview and go through a Starbucks drive-through at the same time.
Yeah, we were demoing mobile payment back then.
Yeah,
we wanted to see how
it worked out beautifully.
Yeah, it was really cool.
That was a blast. That was
super fun. And then
don't forget to plug your company.
Check out Best Innovation Group. You know, we just two things. One, the Innovation Club has been really gaining ground. If you're interested and want to know more about that, I'm going to refer you to one of the Innovation Club members who's on the call, which is Cynthia Schroeder. She can tell you all about it. And then the other piece is, man, we are just doing tons of SDK work for Alchemy, for Q2. Everybody needs work like that done. And we've been doing home banking for 20 plus years. And so we're really good at sort of making the third party stuff. We don't want to make home banking. We just want to make it better. And so that's our story, and we're sticking to it. So let's move on and get to today's topics. Why don't we, Mike?
Yes, sir.
All right. I think we got another slide. Oh, we're switching over. So, all right. I got a big gallery of people here, but here's kind of where I'm at. So we've had all this talk about crypto. So Mike, have you seen what's if I say crypto to you, what's your first response right now?
Roller coaster.
Okay.
Yeah.
Let's see what other people think. So put just the first word in the chat that comes to mind when I say crypto, you know, based on the news and what you know right now. Everybody just put the first word that comes to your mind in the chat. I'm just interested to see what people's first responses are at this point in time. So I'm sure they'll start popping up here in a minute. Depegging, that's a good one. Nice, Lou. Dice rolling, Kevin's great. Another member of the IC. Hodl, I like that one. The future.
I like Cynthia's opportunity. That's positive.
Opportunity, dropping market, empowerment, Cody.
Ooh,
okay.
Wow.
Blockchain, gambling. I like these. Gary says gambling. That's good.
Understood.
Utility risk, misunderstood. Oh, another member of the IC, our friend Fernando. And Fernando, I'm gonna take just a moment. Fernando, do you mind unmuting and maybe popping up for a second? I want to just understand and take a moment with Fernando. You guys, I imagine, are close to where the unfortunate I don't know how to say the name, Uvalde, is that how you say it?
Actually, Uvalde's probably about a 7 or 8 hour drive from El Paso.
Oh, you're the opposite side.
So we're significantly away from it.
Okay, I knew it was close to the border on the other side. I know you guys are as well, but you're along the border and the other way. All right. Well, I just want to make sure, and anybody that was involved, our hearts go out to you. And I know that GCU is on that, you know, down in Texas that way. I wasn't sure where it was, so I just wanted to make sure that we acknowledge and take a moment, maybe, and of just a terrible tragedy. And for all of you who have kids, Mike, I know you have kids in that age. It's unfathomable. It's an unfathomable thing, and I don't want to comment on the politics of it. I just want to, you know, talk about the tragedy and make sure that we acknowledge it. So and I wasn't sure if Fernando or anybody had any folks, or sometimes they have branches out that far, so just want to make sure.
No, and unfortunately we had our mass shooting 3 years ago this August.
That was the Walmart, right? That was the Walmart?
Yes, sir.
Yeah, I remember that. Yeah. I wasn't working with you then, but yeah, I do remember that. So, well, you know, everybody gets touched in different ways. And so we're just, on this program, we'll just acknowledge it's a terrible tragedy, and our hearts go out to the families, the victims, the kids, the friends of the kids. I mean, it just is a spider out web that just will, it's horrible. All right. So I didn't see anybody say buying opportunity. I was expecting someone to say buying. I saw opportunity from Cynthia. I was expecting somebody to say, yeah, Julie said should have cashed in. Mark Rowan says native stablecoin native settlement. So it's interesting. I see a mix of things here, Mike. I see people who are saying, hey, you know, this thing's, we're concerned about it. We're seeing it as risk, high risk. And then there are people who sort of looking at it from a different perspective. I thought that Fernando's comment was good. That's why I mentioned it, misunderstood. And then you see Keith Taylor talk about blockchain. And if you go out into the market, if you just Google, and I'm going to go ahead and bring this up. I think I had it up here on my screen just a minute ago.
I want to hear from Fernando on why he said misunderstood. I would love to know.
Why don't you do that while I bring this up? Yeah,
the deeper meaning. Fernando, if you can unmute yourself and share your thoughts on the misunderstood comment.
I think when I say misunderstood is sometimes when you're talking to the leadership teams, they don't really have a grasp or complete understanding of Bitcoin, cryptocurrency, blockchain technology, the difference, how people, what mining means, everything. I think that it's the whole ecosystem that is just misunderstood or not understood.
Okay, gotcha. Yeah, I get it.
I agree with that completely. And without understanding the whole ecosystem, there are those that sort of look at what's going on and feel validated that like, I told you this was a scam or whatnot. But what's interesting is if you just do a quick search on crypto crash, there's a lot of people talking about Ethereum, which is interesting. And there's the news on it. Young investors lose big. It's interesting they talk about lose big because you wait it out and you may win big. You don't know. I mean, it's all about whether you're going to dump out or not. Yeah. And I don't, that's what we're not seeing is a bunch of people dumping out. And so here's an example. Anderson Horowitz, 4.5 billion. So clearly, Andreessen, sorry, these guys are looking at this, and this is a huge company. Of course, I can't see it because I'm behind the wall there, but huge company that has looked at it and said, okay, I see this as an opportunity. So that was kind of the first thing is I wanted to just get the temperature of everybody in terms of whether it's an opportunity or whether it's the beginning of the end as it relates to this particular platform. And I'll point out that if you go back to and you probably remember this 2001-ish, the stock market as it related to the internet and internet stocks.
Mm-hmm. Oh yeah.
That was a similar, that was a .com bubble that sort of blew. It was just, but it caused the same ripple about the NASDAQ, as it did related to that. So,
but everything came back. So
everything did come back, right? And companies like Google, and there are companies that came out of that are the biggest now, the absolute biggest companies in the world. I was actually on a great call yesterday, and I see he's here, I believe. I was on a great call yesterday. I got to listen in on the distributed assets call that Cynthia holds, and Christopher Beltran was on explaining the platform. Chris, I'd love to get your thoughts. Maybe introduce yourself. He's got a fantastic background, probably one of the nicest people I've ever met. Chris, do you mind unmuting if I put you on the spot and get a little detail, maybe give a little background and talk a little bit about what you were sharing yesterday?
Yeah, of course, John. Yeah, thanks. I'm sorry I'm a couple minutes late. So I don't have a ton of context when you're saying the platform. Which one?
I was talking about you. You were talking about just crypto in general and explaining sort of the assets, and you did a great job. It was exactly along the lines of what Fernando earlier was saying, that crypto was misunderstood. And so wanted to get your thoughts on the current crypto market and what the potential of the technology is versus the coinage. I don't know how to put it, but the technology versus it as an asset is as it relates to credit unions.
Yeah, absolutely. And thanks, John.
And introduce yourself, because people don't know how amazing you are, and I want to that.
I don't know about that, but not next to you, but definitely. No, I grew up in the credit union space. My father was a CEO for 30 years. Wow. So I kind of grew up going to JC and all that jazz. So lots and lots of friends and family throughout the credit union space. And my sort of journey in life took me on the entrepreneurial path. I'm coder, techie guy, built and sold some companies serving credit unions, and got into more board governance and a lot of that space. And that brought me to do a lot of work in Europe with board governance, law, ethics, and all these kind of fun macro sort of subjects. At the same time, in the Bay Area, crypto was coming up sort of, early 2000s. And then when the Bitcoin white paper and all that started getting written, it was really, really a very small community in the beginning. And then what happened was we got flooded with, as soon as Bitcoin got in the news as a get rich quick kind of thing, the Bay Area got flooded with a ton of noise. And I was in high school when the .com boom happened. So I was not in San Francisco to see what crazy valuations do and how the community operates just from a day-to-day, how do the parties and the living room dinners change? And so the blockchain and Bitcoin boom, and the first one was my first exposure to that. And it was a striking change. I mean, it was 1 month to the next. 1 month, it was very, deeply intellectual, smart, accomplished people really looking at what the raw, the profound impact something like this can have. And to the next month, it was, I've got a new coin that's going to make $1 billion, where can I get an investor? And suddenly everybody's an expert in digital assets, when nobody knew what it was, kind of thing. And so a group of us had to form something called Silicon Valley Blockchain Society, which I think sounds really elitist, but it was a small group in the beginning. And the whole thing is we had to meet in secret, actually, in a living room, in a very nice living room.
Did you guys wear like hoodies and stuff?
Oh, it
like
was
big,
it
like
was
like
nuts.
big robes. Like I picture
right?
eyes wide shut kind of a thing. I don't know.
Oh gosh.
We joked about doing a social, not even
Yeah.
at time. But no, it was always mid afternoons on like a Tuesday. They had to put security guards around the house. It was nuts.
Gosh.
Yeah, because a couple of people got caught of it, and then we'd get a crowd there, and we'd have to post like false times that it would be at Wednesday at 3, and kind of one of those deals.
wow.
It was really awkward. And you're like, this is weird walking around a town, being like that.
Yeah.
And so, but in the beginning, it was about 15 of us. And then we grew it to about 90 or so as things were growing up. But it was some really interesting people started to fly in. It was like the head of LA pension funds, right? The person you don't think, the last person on earth, a pension fund head. And the head of San Francisco pension funds was one of our original helpers to create things. And these people are sitting on, 50 billion plus in assets, very conservative assets, right? Firefighters and teachers, retirement funds. And of all people, they're the ones sitting in a room, right, talking about where the crypto world's going, which is crazy. So then we started to get, in the beginning, it was a little over $1 trillion represented, which is wild. And so then the idea was, okay, we've got all these interesting projects, the Crypto Kitties and a lot of the early Ripple people, the founder, all those people were all in there. And you're trying to figure out what is the impact of this technology and what I noticed is the people older than me who had been in the .com boom kept trying to warn us. And they said, guys, a lot of your younger ones weren't there. But then what happens is valuations get crazy. The amount of noise gets absolutely astronomical. And they said it will get overwhelming. And that is going to be the bigger challenge. It's not the technology. It's not where it's going. It's how do you navigate the noise? And I think that was one of my big takeaways that now I'm feeling it here in the credit union space is we start to feel there's so much, right? There's a lot of content. That's why I love John's work because he's curating, to the best of his ability, and he's at least, got a good sharp head on his shoulders in both pots. You need people like that to be able to distill a lot of that information. So that's a little bit of the short story there on my side. So I play in a couple of different banks, always tinkering, always investing and doing new ventures and fun stuff. But I kind of play in both. And then to answer your question, John, on sort of the coinage and the market in terms of the stock and bond world, traditional markets, and then some of this stuff. For me, my biggest thing that I've seen is that whenever you see broad-based declines, so the inflation thing, obviously, Ukraine, the whole thing, whenever you see broad-based declines, to me, all that means is that there's some macro trend operating, which we can all point to inflation, war, whatever it is. but that also means that it's very hard to pinpoint. Like if you were to look at just the stock market and say, well, Marriott stock is down, they must not be a good company to invest in. Well, maybe if everything else is fine and they happen to be going down, maybe there's something fundamentally wrong. But because there's a broad-based sell-off, there's something macro going on. There may not be nothing wrong fundamentally with Marriott. And I feel the same way with crypto, is that I don't see anything fundamentally being questioned about blockchain, because it's not the only space taking a downturn. It's fairly predictable that it was going to go down, just because the whole world's going down. And we all know that, excess cash and interest rates and all that. So for me, just at that very basic high level, nothing really worries me now. And I think that's why you see Andreessen and those still pursuing strong investments in there, because it's almost like it's bargain time. Yeah. Everything's on sale, and so this is the one thing I've heard is that the next few years, even though there may not be as many investor plays with gains, there's going to be a lot of building happening. A lot of people are going to be heads down building all the headlines that will come out in 3 to 4 years of, oh my God, there's a 24-year-old billionaire who reinvented the mortgage industry, right? Using blockchain, all that stuff will be built probably in these next 2 years. And there will be no headlines, no gains, nothing you and I can buy from a stock standpoint. But I do think there's going to be a lot of that cash that was deployed these last few years is now just going to go to pay those salaries, and they're all going to be heads down and you build, because a lot of that, that's kind of where my head's at.
I think that's
the time for build. I don't know.
Yeah. Well, look at Amazon, right? I mean, I doubt that they went and fired all those people. It's no secret that they've been grabbing up crypto experts, right? Amazon has, hired, a couple hundred different people. It's like they're building a division. So it has Google, and I doubt they went, well, that didn't work out, and they fired them all, and they're out in the streets right now with cups and begging. Well, some of them could play an instrument or something and busk, but so this is interesting. So Mark, I was looking through so before you got on, Chris, I said to everybody, I said crypto crash. Just type in the first word that comes to mind when you think about crypto right now. And there were a lot of interesting things. And Mark Rowan said stablecoin native settlement. That's a interesting first word to come to your mind when I say crypto. So something you and I have talked about was in the original business plan of what is now Bonify and was Seal Ledger. I'd be interested to hear, Mark, do you mind sharing a little bit about that?
Yeah, absolutely. So when you threw out John, a lot of things that I think about is just we get so focused on this volatility part of the asset and not the underlying, I'll say, technology and the principles of the technology, which I think are sound on the blockchain. It feels like consumers just get so obsessed with, I'll say, the volatility or the quick rich or the go to the moon kind of concept.
Sure.
But
Total.
if we can take that volatility out of it, and look further at stablecoin, and working for a credit union, the constant thing that we talk about at our senior management team is, what is crypto? Is it a competitive thing for us? Do we want to embrace this? What do we do with crypto? And one thing that I had brought up is, right now, best deposit rates on fiat currency, I don't know, 2%. You go to crypto.com, you convert your fiat to stable coin, it's a 10% return. Or you want to stake some of it. Those are real threats to credit.
And stablecoin, by the way, is going to flop up. It's called stablecoin for a reason, right? So it's not subject to the volatility of the other platforms. Stablecoin, theoretically, although there's Luma, which is people have talked about for the crash, but theoretically, stablecoin is for everything you buy, there's a dollar behind it. So there's a asset behind it that equals what you bought, right? Chris, is that your understanding as well?
Yeah, that's my understanding as well. Yep. Yeah, Luna
So
was a little bit of an outlier. The rest are backed.
well, that also happened with Tether too, with Binance, right? That
Yeah.
caused a bit, the same exact thing caused a crash about 5 years ago. So Mark, when you said settlement, are you thinking like ATMs? Are you thinking like dealerships, where you're trying to deal with the loans? Are you thinking kind of all of that? Do you think that, I mean, because there are people like my friend Kevin Wright who would argue, well, we have perfectly good settlement things in place and they're good and fast and they're not a problem.
It kind of feels like the merchant services, what is their ability to, settle crypto natively, either a wallet to the consumer wallet. It seems like today, there are things being touted about, you can use Bitcoin to pay for X, Y, and Z, but is that more, it's just a lot of on-ramps and off-ramps. It's not truly native. It's more of, someone's doing the on-ramps and the off-ramps to it. So that's part of goes through my head is the consumer side. We can do, we can have crypto all we want, but when it comes to actually using that crypto as a form of currency to go purchase goods and services, is the other side there? Yeah,
that's a great point.
One thing I'll kind of add in there too is that I kind of feel like, so in the mantra, the thing you heard cheering on, especially early, was that stick it to the man, circumvent the financial system, and Bitcoin has this finite supply, so it's a safe place to buy because you can't ever, there's no monetary policy that will ever add to the supply. When you get into the stablecoin talk and you start to talk about backing a currency, when you look at cash, it was originally with gold, right? And then when the UN and after World War II, the US was able to convince the world that every dollar doesn't have to have a bar of gold or whatever behind it, or an ounce of gold. And so it's just on the good faith of the United States of America that it'll pay back its loans. If you were to distribute that digitally and say it's on the good faith of America, I think there's a fairly healthy percentage of the crypto community today, because it's not massively adopted yet, that would reject that notion, because why would I buy a virtual dollar when the value can just go down because the Fed can just mint more? Those monetary policy, the way that things are minted, I think will be very, very important into how things are perceived. It may not make economic sense, but even though America's backing it, it's no different than a dollar. But I do think there's a perception issue there of when there's can't be any more made, all of a sudden we all like it for some reason.
Yeah, I mean, scarcity is an issue for that, right? I mean, that's always what sort of brings people in. It's like the NFTs, which, by the way, I happen to be kind of I've made friends with Seth Green, and he had just had a big crypto thing. He had his Bored Ape Yacht NFT stolen. I'll post a link here in a minute. I'm actually and now it's a struggle because he was going to use it as the basis of his television show. So interesting, because he feels as though he's lost the rights to that for that particular character, right? That's interesting. So here I have a provocative question that I want us to discuss, and I'm going to bring this slide up. I just built this slide right now while we're talking. This is I think interesting and could be an interesting end game. So I'll present it here. But what if Amazon made a coin and gave a significant discount to use it? What would the impact? Let's play a little tabletop game. You guys have all done tabletop games for like, what if you get hacked, right? So this is a tabletop game of what if this significant player, and I'll describe it. You put money, you create an Amazon wallet, you get this Amazon Cash, we'll call it Amazon Cash, I guess, for now. And you put your money into it, you use it for your Amazon purchases, and if you use their coin, you get, I don't know, Chris, what do you think of? It would save them at least 5% off the Visa switches, right? So we'll call it 5%. Yep. The first question I have is, would you as a consumer use it? And so let's answer that in the chat and see what people say. And Chris, you can be the one that answers out loud for everyone.
I don't know about that. I think everybody else should chime in too.
No, everybody's going to chime in, but you
got
get
some
to
yeses.
say yours out loud.
We can take
You
turns.
too, Mike.
Yeah, no, I think
Mike?
first, my head when you said that, where my gut went was, yes, anybody that is price conscious, so coupon clippers, anybody that likes credit card rewards and that kind of thing, and has an Amazon credit card or whatnot, I think would leap at that, just because any savings is always savings. I don't know that they would necessarily perceive it as, oh my God, this is the most valuable coin on earth. I think it would be just another sort of coupon play.
That's what I say too.
Yeah.
But what if they use it with their sellers and their providers? And
yeah, I would probably use it. Yeah, why not? Right? If we're going to get savings.
Exactly.
Well, it's not a stable
return.
It's not a stable coin. It just has if I'm Amazon, what I would be trying to build is something that said, well, it's always going to be worth $1, but it might be worth more.
Yeah. I mean, why not? You'll definitely get part of, my dollars into their ecosystem, just like they do the gift cards, so like a reloadable.
What if they
Starbucks
said,
card, like a reloadable
what if they said
Starbucks
you got to
card.
store $100 in there, right? So now let's look at another piece of what they do. They already have Prime, which has some ability to this.
Couldn't any retailer do this? Like Starbucks, they could easily do this.
Well, Starbucks is doing something similar, but this is a very different model. This is a very different model. What I'm talking about, because if they actually use the blockchain in a coin and they begin to use it with their seller, remember, they're a large ecosystem connecting all these sellers and deliveries and everything else to one person. What if you could get paid in Amazon dollars for Amazon deliveries? I mean, did you think 3 years ago that people, off the street could be driving around in Amazon trucks? And the answer to that is no. I didn't think about that. It wasn't something that came up in my mind. But if you try to order something like, let's go with Honey Nut Cheerios, because I'm kind of hungry.
I'm hungry.
So if I go on here, this is where I'm making a point here. So if I say, I want to make sure I get some of these, I want to buy these. So I have two options. This one isn't doing it. Let's see. What I'm getting at is their subscription option. So I'm going to find something that'll pop up and say, there you go. So I'm not sure everybody's seen this or understands it, but over here, there is this subscription option, right? And the subscription option basically says, hey, I'm always going to want Honey Nut Cheerios, and I'm always going to want them every 2 months. Anybody? So I'll go back and look at the other questions, but do you use this, Mike or Chris?
No, I don't. But we should, because we get enough Amazon stuff here. So yeah.
I mean, the Amazon people know me by name. So okay, so people said yes, they'd use it for coffee. Some people said stable or altcoin. That's a great question from Mark. I'm going to call it an altcoin because I think that's what they might try. And let's see what else. So a lot of people said yes, they would use it. Now let's talk about what the impact would be on the credit space. So we're already kind of being eaten apart, but do you know how much money an average person spends at Amazon per month, Chris?
No, I haven't. I would bet it's much higher than I would think. I would say $100, $200, but it's probably higher than that.
How about you? Mikey?
I'm in the same boat. I think it's probably maybe pushing $400 a month, something like that.
Okay. Anybody else? 125. So we're taking bets, right? So we're gonna do just we'll go to the ultimate decider of things, the internet. Nah. Average American spend a month at Amazon. I mean, if you've been out on the road, okay, so the 31% of US Prime members spend an average of between $51 to $100, while another 23% spent. This is on the Prime Amazon stuff, so it's not it's up to that, but it's but here's the interesting thing: between $200 and $500 is almost 13%. Now here's the other question: how many of your members do you think are Amazon users? I would say that 99% of your card holding members use Amazon. And I would defy you to dispute me because I just, we could do everywhere I've gone, I've done a straw poll. I can't find anybody that doesn't have an Amazon account. So other than this one guy who said he was living in the woods and had a typewriter, was doing a manifesto or something, but and even he needed the Amazon to get some stuff like fertilizer. Anyways,
and real quick, John, do you happen to know if when the transactions come through for the credit union to get visibility into that $100 or $50, do they just see Amazon got charged, or do they get insight into the actual things bought?
So no, they just know Amazon got charged. So the MCC code does not tell you that. But you're on the right track, my friend. You are now on the right track, because how long before Amazon starts proliferating their coin elsewhere to be used, right? Because they already have an ecosystem of Amazon Cash, right? You can go to many websites today, and one of your options for checkout is what? Amazon. What if PayPal did this? So, what does the effect look like, right? Well, one, you could be disintermediated once again. Two, deposits could portend to be lower because you're having that money sort of filter out. But then what advantage do they get from having this coin system? Well, they go away from settlement. They don't have to bug with Visa and some of these other things. They get instant payment. They theoretically could pay their vendors faster, which is what they would say to put them on, right? That's why they would encourage them to get on it. I mean, that's the whole point of this exercise in my mind, is to try to think about, what happens outside of this system that could have an impact on us. And to me, that's a big one. If PayPal did the same thing, it would have a big impact.
Yeah. Do you think, John, that is Amazon, the Amazon example, which I love, is that sort of a one and only because Amazon has this unique 99% of most members have an account? Or is it also like the Walmarts or any other big company? Is it the top 10 largest, used companies that has this potential to own their own payment ecosystem? Or is it really
absolutely Walmart? I actually got to meet Mike Cook once, and I can tell you, if you have, he hates with passion Visa, MasterCard, all those things. If they could wave a magic wand and get rid of it and have their ecosystem be just theirs, they would. And that magic wand, I think, is rapidly coming to bear. I think that it's just like any other ecosystem. There are those that are large enough because they have, especially if you have if you are in a mode where you're doing sort of a platform play, which you can think of Amazon as sort of a platform play. It's just a physical platform play. They connect people who make crap with people who want to buy crap. And I don't mean crap like Amazon only sells crap, but I mean stuff. So, because that's all their shelves are, and what their real magic is they figured out how to turn over stock and turn over inventory much, much faster, which, by the way, leads to just-in-time inventory. Now they're looking at how do we connect that inventory to a smart contract that instantly takes the work out, tells us exactly what's there. The sellers get an advantage by being able to predict better. And then the customers will get that advantage because we could lower their costs by 10%.
What is your gist on, or your thoughts on, like, why do they need blockchain and a smart contract to do that when they've had smart databases and world-class supply chain systems this whole time? Like, why have we never had a Amazon token anyway? That I don't know that they need, or is there some advantage that a consumer would get by having it in my digital wallet, right? Which most consumers don't have. They have a bank account with dollars, or something like. What's your thought on that? What do you think? Like,
well,
why not?
Why haven't they looked at that? Because
why haven't they done that yet? Like, they could do it.
I will give you an example that I can talk about. So I was Cody said the right thing there, and I'm going to use the example to exactly. He says it automates trust, right? Trust is key, because when you have trust, your prices go down and your service goes up. But let me explain. So a large soda company, think the biggest soda company that you can think of, but I can't say the name, came to me and said, "Hey, we saw on your LinkedIn you're a blockchain dude. We have a problem. We have all of these bottlers, and they make our sodas, And when they make our sodas, we then go ahead and we have a logistics issue of say Walmart ordering 10 billion of these sodas, but they need to come out of certain warehouses and certain bottlers so that logistically you're getting them as close as possible in the trucks. You get where I'm going, right? Mm-hmm. And so they put in this big, large SAP system, which is essentially what you're talking about, Chris. Why isn't Amazon, they already have these sort of SAP systems.
Yeah.
But what was the value? Why was this a problem? Well, it was a problem because they didn't factor in the human element. So what would happen is a truck would come in, the SAP system would say, oh, there's 10,000, there's 300 cases of blah soda available here. The person would get that on their little thing that they're carrying around, these little it's like their phone, you've seen it at Best Buy and whatnot. They'll go and they'll go, okay, let me go find this and pick it, because they're going to put it on this truck. They go there only to find that it's not there anymore. And what has happened is that the SAP didn't account for the fact that a human would have to get it off of there, scan it all, in order for it to be in the system. So what they do? They go, well, we got to put something on the truck. So they give them water, essentially. And while water is a lot cheaper and doesn't match up, the next time when that truck gets there, the customer doesn't get what they want. They've been charged for a more expensive thing. And so they go back and they, on the invoicing, come back and say, hey, guess what? We can't do that. We've got, you owe us this. But they've so fast, it's already, the bill is paid. So they never accounted for sort of the human element of what that could be. Whereas in a blockchain environment, if it were that everything was sort of tracking itself, on the trucks, which you could do with SAP, but it's about the accounting. So the token, what that did was it allowed them, if they're paying in tokens and just reconciling at the end of the month, which, by the way, to sound like a familiar problem, remember the ATMs and foreign acquirement and how much money we would go back and forth and trying to reconcile it all? It's a similar issue, right? Because you don't know what's what, and you're not sure what happened until the end of the month. So what the token allowed them to do was to continue working to deal with all this, but not to have 10 million invoices going back and forth, trying to reconcile all the things that were and weren't there. So they would just come up together at the end and deal with it at the end, because they're not going to stop buying that product. It's the most famous product in the world.
Oh, interesting. That makes a lot more sense. Thanks for clarifying that. Yeah, it's curious.
But there's other issues with that. Have you ever gone online? And this happened to me yesterday. I went to Ace Hardware, and I went online because it's not a short trip from where I am. And I looked and I said, okay, what's there? What's exactly there? And I wanted to get this one thing. It's called a garden dragon. You ever seen one of these, Mike?
No.
It's like a blowtorch, but it's a weed eater. It's instead of a weed whacker, it's a blowtorch. Oh, it's a great thing.
Fire comes out of it?
Yeah, fire.
I don't think that would go well in Southern California.
Well, it's good here because
Tennessee, yeah.
Tennessee's all about it, right? Okay. The next one's going to be called the weed shotgun. It just shoots it. But anyways, so I wanted to make sure they had it before I made the trip to Linden. I get there and they go, well, we don't have that. And I said, well, hold on. It's probably around here somewhere. Look. And I showed it to him. He goes, he laughs at me. He goes, you believe that? And I said, yeah, I kind of did. I was kind of counting on this being right. And he was like, yeah, sometimes they are, sometimes they aren't.
Oh my gosh.
But that's the thing. And who else has had that happen to him?
Yeah.
So what Cody points out is that trust is the issue. Yeah. And so if you want to do business with Walmart, one, you want to trust that they're really, that the supply system, you're not getting a filtered version of it back at you. And so Amazon, I think, would look into that. That's part of the reason they want it. I also think they see an opportunity to make money. I mean, there are too many middlemen in the payment process in the world today, and they're only there because it's from previous tech that isn't necessarily useful today. Like, I'll tell you my dream. If you could get the receipts in your bank account, like if I could go into my home banking and when I click on the Amazon thing, I also get a receipt, like you were talking about, Chris, of what was actually bought. That would be the dream. Mm-hmm. Cause a lot of divorce in this country, but it would be a dream. It would be a good thing. So, it's just thinking like that I'm trying to put my mind around and I don't know that they're going to do that. I don't have any inside information, but I do know they hired a whole boatload of really impressive crypto people. Like those guys are, that's big money to have even 3 of those people in a room, much less 20 of them. And why would they do that unless they had a good business case? Because, it's Amazon. And what do you think Rocket Mortgage is doing right now? Do you think they're going, well, we built the system, everything's good, we don't have to worry about it? No, they're going to try to figure out how to squeeze more margin out of that system. And what that's going to be is speed. That's how you squeeze more margin out of a system. They've got to streamline that process more. And if this will do that, then they'll do it. And so, example, we all pay dealerships, right? What if you could pay those dealerships faster? That would bump you to the top of the line of when the person comes into the dealership and they're going to get that loan from, the guy that says there's another guy that he has to go talk to, that dude. Well, they pull it up on their system in Dealer Track or whatever it is, and they get all these lenders that could give me the loan. How do they choose, which one is the best? Well, it's a blend of how much money they're going to make, what they got to move off the platform, and of course, how quickly they get the money. Because for them, liquidity is much more important than you might think. And so if you were the fastest payment platform, that could actually make a difference. Now, we'll have real-time payments. We'll have some of those things, but what we won't have, and this, Chris, was what you were explaining in the meeting, which I thought you did an excellent job of, and I kind of tagged on, is smart contracts. And the best example, I'll let you, I'll do mine and then you can do yours, Chris. I thought yours was good too. So my example of a smart contract is, and this will probably happen with Tesla because he's looking at blockchain technology for this, is we give a loan to a person and the contract says, if you pay your loan, you get to drive this car. But if you do not pay your loan after X amount of times, the car is ours. And so you stop paying your loan. And not only does your car cease to work, but it drives itself back to the credit union branch. Write it down. That's coming. It will happen. You go ahead with yours, Chris.
Yeah. And I all examples. I loved yours, John. That was one of the best ones I've heard. But there's so many. There's so many. I think yesterday, I threw out like a diamond one. Part of the point I was making around that was that
the asset itself,
is that when you have a legal contract at the end of the day is a Word document that we put some ink on that represents our signature. And that's all it has. It's physically just a Word document, or in a physical contract, it's a piece of paper with ink, and that's it. But the asset that's being talked about and agreed upon and who has liability on is physically somewhere else, like in a safe, a property. It's physically out in the world. There's no way for a piece of paper to go and pick up the house or the mobile home or the car and lock it in a garage and have a physical handle on it so that it's enforced. So the way that we enforce contracts today is if you violate it, then we do our best to reconcile it. And there's lots of ways to reconcile contracts. But in the sort of most legal, normal sense, you bring somebody to court, and we rely on a justice system to enforce those contracts. And then you have a judge or jury kind of, mandate what happens. And then you have law enforcement enforce the handover of those assets and things. In the smart contract world, one of the interesting nuances that I think is interesting is that the smart contract code, by virtue of the assets being talked about in the contract, having some sort of digital representation and being in some sort of wallet that's accessible and open blockchain style, means the contract can have a handle or a grip, almost like a little mini escrow piece on that asset, and can do certain things with it. And that, having a contract physically be able to act on the asset when conditions are met, is a very interesting form of enforcement, because you almost no longer need a justice system or this legal framework to be able to guide, transactions and liabilities enforcement. And that's exactly what John's talking about with the car, is that the contract itself would have a key to the car and be able to start it and drive it back. That's
and what's interesting about that is to take it another step. If we think about the crash of 2008, if these assets, it's back to Cody's point about trust. If these assets were on a chain, where they could have been reviewed, they would never have been able to mix in the subprime assets with the other ones without it being noticed. Would you agree?
Yep. Yeah.
And so it changes the bundling, the packaging, and how we handle these assets today. Because right now, if I want to sell a bunch of loans, I build a big file, CSV, and I write a program and I dump it all, and then we pay or they pay, and money comes in, put it in the GL, and here you go. Do I send the full history of that loan? Not always for the paper. Do we send, there's a lot of information that could be left on the table that wouldn't be left on the table and could be examined before those purchases are made on the assets. So it's just fantastic so I guess the point of this whole thing is, watch the crypto crash. I get that. And I certainly think that I think Chris, you alluded to this, that anything that flies above, what goes up must come down. Right. And in this case, I certainly think it's a correction, but the underlying tech, which is why if you Google crypto crash, you see so many people saying, look at Ethereum. And, everybody thinks Bitcoin, but Ethereum's a far different platform. It's a platform built for the smart contract piece that is designed for people to make other things out of it that do exactly like the diamond thing. And by the way, the diamond piece that you're talking about is already happening. I know companies that do that. Did you know, by the way, if you die, you can have yourself turned into a diamond? It's a company called Eternova. Yeah, I just spoke to him the other day. So I was thinking it's a service Craigens could offer, because we do nothing for members that die. And we should. By the way, imagine a will if you have it on the blockchain. What happens when the smart contract sees your death certificate? All Chris's stuff just gets sent to me. Right away, it just shows up, and Mike's stuff too, including that big TV behind him. But no, I if you think about that from the perspective of the trust model, it's a scary thing, but it's no doubt coming. So yeah, I think a company's called Eternova. If you want to turn yourself into a diamond when you die, I remember we've been talking to them because they're looking into what it looks like to use the blockchain and deal, like the diamonds all have significant characteristics that are recorded that are like fingerprints, I guess.
How much is the diamond worth?
I don't know, but that's what I was thinking.
Like an artist, you'd be worth more dead than alive.
Yeah, if you could just make yourself a diamond. Yeah, here it is. If you could just make yourself a diamond, then why don't we just need to find some bunch of members, or I don't know, we need to find a supply of people, and then we can just.
And then you can have your family members fight over you.
Yeah. So here it is. If you guys are interested, I'll post it. But you can turn yourself into a diamond from your ashes.
Oh my gosh.
Oh my god.
And there's your diamond.
What in the
That's
world?
actually my friend Steve.
That's funny. Wow.
Actually, that's a dog. I want to do my pets. I'm going to start doing that. And then we can say, well, how do I know for sure that this is Steve, Chris?
Yeah, how do I know that's my great grandfather or whatever?
How would I know for sure, Chris?
Or my little dog.
Eerily curious. How long does it take to turn your dog? Like, is this like you get it 2 weeks later, or is you have to wait about 1,000 years?
No, it's the process is like 5 days. I can introduce you to him if you want to talk to him. But my point is that they use the blockchain to track, because you need to know who it is that's in there. If you pay for this, you want to make sure that because it's going to outlast me and everyone else. So it's possible you could have great grandma on a keychain or whatever.
Well, and one of the interesting things that we should see this year, and for sure by next year, hopefully, is that Ethereum, which has always been sort of the big smart contract platform, the last few years, a lot of the news has come out because of the fees. And there's a million startups around it that do off-chain smart contract processing, and then they settle it later onto Ethereum when the fees are low. Well, one of the biggest things is their consensus algorithm going from proof of work to proof of stake, which is a much bigger conversation for a different day. But one of the things to watch for is that this year, this actually in June, is stage one of it. And stage two, they're hoping happens in December. But they've been trying to do it for years. This is like 6 or 7 years now. They've been trying to figure
6 or 7 years, yeah.
But that conversion looks like it's more than likely actually going to happen now. which is, long awaited. But one of the things that should do for the ecosystem is that when those fees drop on Ethereum, which is the most widely adopted one for smart contracts, it's going to be interesting to see all of these startups and this funding that goes into how do we now activate? Because one of the hardest parts with even NFTs is buying, a $10 artwork might cost you $70 just in fees. And so it makes it a little impractical. So a lot of this stuff is still very conceptual, but to see it actualized on Ethereum may happen as early as this year or next year. And that's going to do some interesting things fundamentally for some of those applications, especially on Ethereum specifically.
Yeah, because there's a lot of people who have built things that they're sort of waiting for that to happen. There's a lot of people who had a problem they couldn't solve, and now understand this is going to happen and understand it will solve their problem. And they've built things. And you were pointing this out earlier that we'll hear about those in the future. Like, oh, I did this, I did that, because certain pieces fall into place.
Mm-hmm. Yeah. So great examples on smart contracts. It's cool. It's good stuff.
Yeah, I think smart contracts is probably something we need to do soon. But I think the real important town hall we have to do is we have to go through and work on turning people into diamonds. So I'll probably get Eternova to come on. I still think I would like to start Chris, if you want to work with me, I'd like to start a QSO. And what we will do is just give us your information and we will search obituaries. And when members die, we'll be the first or second to contact them to give our condolences, to do whatever is possible. We'll offer them the diamond service. And
so financial partner for life and beyond, is that what you're
yeah, because if you think about it, Crayons, we don't really do a lot for members and we find out in a bad way when something doesn't go right, or maybe they're they know they had this IRA, and if we want to get the next generation of people, we've got to sort of deal with the family when that happens. And I legit think it's a legit service. I just adding the diamond thing on is now the icing on the cake. But yeah, this show brought to you by Eternova. Turn your pet or you into a diamond. You have I wonder if you could dig up people,
and then turn them into a diamond.
Then turn them into a diamond. Yeah, I missed the opportunity, but now I kind of want to do it. And so, but yeah, check it out. Well, guess what? We've had our time, and as always, super interesting discussion. Chris, you didn't know you were going to be put in the hot seat, but I figured I would do that. And I can't thank you enough for taking the time to show up. And I really enjoyed your discussion yesterday. I think you really helped a lot of people. So
welcome, John. Yeah, definitely. Happy to be in the hot seat anytime on your stuff.
Man. And if you want to work with me on deadmembers.com, let me know. And if you're a Crayon and interested in the service, reach out, because I'm telling you, it will help you. We got to get ahead of what happened. We got to get ahead of that. We shouldn't find out when some sad family member calls to deal with the stuff. We should know, and we should do something about it.
Well said, my friend. Well said. Yeah.
All right.
Like it.
Well, thanks everyone. Chris, as always, I love talking to you. Mike, you too. And thanks for everyone for joining us this week. And we've got more to come, more exciting stuff. And it's never slow around here. So, and if you could think of something, a topic, or you want to jump in, please go to the website. It's big-fintech.com. Maddie can put it out there for you. And it will, every town hall is in there if you're interested, or if you want to comment, or, if you got an idea. We love having everybody on, and especially Tom O'Shea, because all of us thought he was actually gone, and he turns out he's alive. And
he is.
I think, from what I can tell.
Interviewed him at he was at Correlation. And
he is. There he is.
John.
Live. He was a first member of our team here. So
that's right.
I was planning on having you turned into a diamond, but it turns out you're good. So
I'm already a diamond. Just ask my wife.
That's right. How redundant that would be.
How redundant it would be. All right, everyone. Well, thanks so much, and appreciate your time, and we'll talk again.